12. This Thursday morning has been a very, very busy morning for me. I tell you, it's been really, really busy. But you're welcome to Women Radio 91.7 FM, the voice of women, Nigeria's first and only radio station for women and their families. And this is her business. Her business is your weekly women companion, right? Where we talk about all things. So, right here on Women Radio 91.7 FM. And as always, we bring on guests to talk to us about one thing or the other. But today, we're going to be talking about something different, but business wise, I'm sure you're not going to see this one coming. But if you're a part of the show last week, maybe. My name is Femi Bangbala, and let's just get into it. We are live on YouTube at WFM 917. You can also listen to us on the go via our website, www.wfm917.com. When many people hear the word tax, the first reaction is nah, not today, please. I'm going to deal with this later. But the truth is, if you're running a business, whether it's big or small, whether it's an online business, an offline business, tax is something that you should not ignore, and you cannot ignore it. Our guest last week told us that even if you register your business and it's not yet running, you cannot ignore it. And I was like, yeah, because I registered the business maybe 2-3 years ago. I've not done anything with it. So what you're trying to tell me is that I have to have still done taxes for that one. Please, I can't deal with that right now. And that's what we have, a well-seasoned guest here to talk to us about this. Because at the end of the day, the problem is not that we're avoiding taxes, it's that me plus you, we don't understand what we're supposed to do in the first instance. So today we're going to be talking about filing your taxes, what every woman should know in business. I mean, what every woman in business should know. What does it mean to file your taxes? Who needs to pay for the taxes? When do you start filing these taxes? How do you avoid unnecessary trouble? The questions are plenty. But today we have a guest, and give me a second to get up her flyer. Because she's well seasoned, right? Her name is Barwa Oluwaseyi, and she's ACA, ACTI, ACSI, BSc. Yeah, you know how they do it in when you're doing citation for somebody, yes, or maybe a president, GCFR, GCON. Those are her titles. She's a seasoned accounting and compliance professional with over a decade of experience. She's the head of accounting at compliance. Accounting and compliance at Audio, and then she's an expert in auditing, financial management, and regulatory compliance, providing strategic leadership in financial oversight and risk management. She's committed to integrity, excellence, and continuous professional development, adept at designing robust compliance frameworks, ensuring transparency, accountability, and sustainable growth. Let me pass my shakere. Ladies and gentlemen of the press, this is Oluwaseyi Baraka. You're welcome to the program.
Thank you.
How are you?
I'm fine. Thank you very much. Thank you for having me.
Thank you for coming. Thank you for agreeing to do this. How's your day going so far?
It's been fine. We thank God.
Okay, awesome. Okay, let's just jump right into it because my eyes on the clock. What does filing taxes mean?
Okay, what filing taxes means is just being compliant with all the statutory requirements.
Okay.
As an individual or a business owner, there are some taxes that you're meant to file. Once you have registered your business, the next thing, you register your business with CAC, then the next thing is to open a bank account, so that you won't mix up your personal account with your business account. Then the next one is to register with FRS, now NRS, that's Nigeria Revenue Service. And you also register with State Internal Revenue Service. They are two different bodies. So for the NRS, they are the one in charge of our company income tax, VAT, withholding tax, CGTs, stamp duties, and the like, while the State Internal Revenue Service are the one in charge of our payee. They also have the aspect of withholding tax they are in charge of, and they also have the aspect of CGT they takes, and development levy, business premises. So these are the things that every business owner must know about. Or if you're not conversant with all those things, you must get a professional who is going to tell you this and this are how to go about it, so that you will be compliant and you will not have problem or penalty, because anytime you don't file, there is tendency for penalties and interest, which you can avoid if you're a tax compliance person. So filing is just ensuring that you're complying to all the statutory requirements and keeping your books clean for tax purposes.
Okay. So you said it's either you have to know these things as a business owner or you get a professional, but at the same time, it's important that you know it first so that the professional will also not bubble you as well, right?
Sure.
Yes.
You know, like these days now is a very good thing that anything you want to know is actually online. So
Online.
you can go online, even you go online first, get some information, get insight. So by the time you get the professionals, when they are telling you, okay, you do this, you understand what they are saying perfectly well. It won't be like, okay, someone is just telling me I should do this, and you don't understand the reason why you want to do it, because there are a lot of taxes depending on your kind of business. So by the time they are explaining those things to you, you also get it and know the reason why you're just paying it, because you're not just paying tax for paying sake. There are reasons for each taxes that are specified that we should pay.
Speaking of the different types of businesses, let's talk about small businesses, because we're talking to women who are market sellers who probably just opened a shop to be selling drink and rice, maybe frozen store, just small businesses. Do they need to pay tax or are there exceptions?
Okay, so this kind of business are what we call sole proprietorship.
Okay.
So they are business for small traders and everything like that. So for those kind of business, yes, you also have to register, because once you register, you have your name. That's register with the individual that you are employed by an organization. Those ones pay payee. You might be employed by an organization and still have your own personal business that you're doing. So if you have personal business that you're doing, you are assessed to tax under Peter as an individual. So once you have, maybe you've looked at your total revenue at the end of the year, you've looked at your expenses. So total revenue minus your expenses, then you've gotten your gain. That gain is what is coming to you. Then you now compute the actual payee that you're supposed to pay as an individual or as an enterprise. So you're also assessed to tax. And based on this new tax, based on this new reform now, if at the end of the year, your total profits, everything that comes to you as a business owner is not up to 800,000, you are exempted from tax.
Right.
So you're not going to be paying anything. But once you move from that 800,000 and above, even if it's 900,000, on that 100,000, on that 800,000, on that 100,000, you have to pay tax. They will assess you to tax on that one. And being a sole proprietorship, I explained to you earlier that there's something we call withholding tax.
Yeah.
So for withholding tax now, if you are you're a kind of sole proprietor that also have contracts that you're giving to people. If you are giving contracts to people or people are helping you do some things, that's what we call withholding tax. You have to file withholding tax as well. So this withholding tax is either 5%, depending if it's just normal contract or if your business is a kind of professional service. Probably as an accountant, I'm an accountant now. For any service that I'm rendering, if I'm rendering a service to you now, before you pay me, if I share my invoice with you, let's say my invoice is 200,000 naira. If you want to pay me, I'm going to share my invoice and there's going to be a VAT on it. If you want to pay me, you are going to deduct withholding tax from that invoice I'm sharing with you. So that withholding tax will be paid on my behalf to state internal revenue because I am an individual. And vice versa. If you are the one, I'm the one doing business for you. You're the one doing business for me. If I'm to pay you, I will deduct withholding tax from whatever I'm supposed to pay you. So depending on the kind of business you're doing for me. So if it's a professional business, it's going to be like 5%. If it's a contract of supply, maybe you are supplying me some things, it's going to be 2%. So I'm going to deduct that withholding tax and pay it on your behalf. So by the time I pay that withholding tax on your behalf, at the end of the year, as I've explained earlier, maybe at the end of the year, my total tax liability is now 1 million. But because some people has actually deducted some withholding tax and paid on my behalf, if we calculate all this withholding tax together, those withholding tax that has been paid on my behalf, if we calculate them all together, and it amounts to like something, let's say 200,000, and my tax liability is meant to be 1 million. Because of this withholding tax that I already have, I'm now going to pay 800,000 instead of the total 1 million. I don't know if you understand that.
I'm trying to. It's going over my head, but I'm trying to.
And that, that is why I said sometimes it requires professional to explain all these things. Yes.
Yeah.
Because as a business owner, you might not get all these things perfectly well, except a professional explaining to you that this and this and this are how you do it. If you get someone to come and repair something in your organization, depends on what they want to repair. Maybe you have all these what do they call them now? They want to repair your maybe they want to repair your furnitures.
Okay, carpenters.
They're going to give you invoice.
Yes.
By the time they give you that invoice, when you're making payment to them, that payment, depending on what it is, will attract withholding tax.
Okay.
Because it's a contract. I'm just using that as an instance.
Yeah,
so it will attract withholding tax. That withholding tax, you will deduct it. So if that person is giving you that, okay, my invoice is 200,000 based on those things I'm going to buy, then my labor fee is 40,000. Then from that labor fee, only from the labor fee, you will charge withholding tax, not from the entire invoice
amount of money, right? Okay.
Yes, because the entire invoice might show some aspects of reimbursement. They are buying some things on your behalf. Like I said, your fan and your furniture, they are buying some things. So you can't be withholding me on those things I'm buying on your behalf. You can only withhold on my amount on only the labor fee that you're paying me. And once you withhold, you have to remit it on my behalf. So if the vendor is meant to share their payer ID, because we are dealing with individual now, they will share their payer ID. Once they share their payer ID, I'll go and remit that amount on their behalf on their e-tax, on my own e-tax portal. So it will reflect, and I'll share receipts with them. Those receipts are what they use to claim tax credits at the end of the year that reduce their tax liability.
Okay. I see the need for getting a professional because you have to understand the intricacies of what am I paying for what tax is this one, and the different. So I see the need, but again, it's important that at least we have basic knowledge,
basic understanding.
Yes, but for the taxes, are there percentages at which those taxes are taken? So what I mean is, a small business, you said if it is less than 800K, they are exempted. But when it is 1 million, how many percentage? What's the percentage of that 1 million that goes to taxes?
So there's this table that is used. It's not just a particular percentage that is going to taxes. So let's say at the end of the year now, your total income, that's the total profit. Because I'm still restricting it to individual based on your question. It's different from when we are dealing with companies. So we are still talking about sole proprietorship now.
Yes.
So if everything that comes into your whatever we call your income now, your profit at the end of the year, let's say it's now 2 million. So from that 2 million, the first 800,000 is tax free.
Yes.
After the 800,000, the balance, there's a 15%. There's this way they call. There's this first 15% on your balance. If you still have more amount for us to tax, then there's the next 18%. There's the next 21%. There's the next 23%. There's the next 25%, depending on what your amount is. It is. No, because we use a smaller amount. We are talking about those people that has up to like 50 million income now. Those are the ones that will get to the essence of that 25% and those things like that.
Now I understand why a lot of small businesses they want to do it under the radar, because it's like, wait, what's going on? How much do I have to give? Even big businesses trying to find a way to evade taxes, because they're just like, why am I? Because that's a lot of people.
Sorry, I'm cutting you. For real, this new tax law, to me and to those that have really tried to understand it perfectly well. If you're a small business owner, you tend to pay lesser than if you're this kind of person that you've been complying. Maybe let's say you've been complying. If your total income is less than 20 million annually, and you've been paying tax normally before.
Mm-hmm.
With this new tax reform, you pay less than whatever you paid in 2025.
Mm.
Mm-hmm. But if your income is now above 20 million, then you pay more, because that's why they said it is for high net worth individual, not for if you're still struggling, you're a small business owner. That is why we have those 800,000 free. Then the remaining percentage that is going to be charged on it will actually, then don't forget the rent relief that we also have, that cap of 500,000. Even if you're paying 5 million as your rent, the cap is just 500,000. So what they can deduct for you is just 500,000. But this new tax law has actually helped to reduce whatever you're supposed to be paying as a small business owner as compared to what you're paying before in the previous year. That is if you're doing it the right way before. It is when you're not doing it at all that you still see it like, now I'm paying more. I be this tax law said, what is all this? But if you're doing it, if you're a tax compliance before, you see that this law reduce your tax liability.
Okay. So how does one register for tax in Nigeria? Is it through the professional, or you can do it by yourself?
You can do it by yourself, and you can also get the help of a professional. So
Okay.
it's always very easy. The tax registration can actually be done online, and you can walk into any NRS tax office. They will tell you all the requirement things you need to bring. If you're a company, they will ask for your CAC document. They ask for utility bill. They will ask for national ID card, maybe your NIN or something. They will ask for that. Then other information about your business, they will ask for it. So once you submit it, they will tell you like, okay, this and this. Once you submit it, they will do the registration for you. And good thing now is that initially when you register with CAC, your CAC certificate does not come with your TIN, but now you now have your TIN on your CAC certificate, which helps you to immediately TIN, tax identification number.
Right.
Yes, tax identification number comes with your CAC certificate. So with that, you can easily go and open your bank account and do all the things that you need to do. But with you need to register with NRS and you need to register with FRS.
Okay. You
but
mentioned
also mention
go ahead.
for a small business like a sole proprietorship, they don't pay company income tax because it's like an individual business, so they don't pay company income tax. The only thing they can actually pay, and the reason why they will have to register with FRS, now NRS, is because of VAT and withholding tax.
Okay.
So for things like VAT, once 50 million for registration, then 100 million and above for small business, or 100 million. So if your business is not, if you have not started making up to like 100 million, you don't pay VAT, you don't remit VAT. So you can see the law is helping. Unlike before, if your turnover is 25 million, you have to start remitting VAT. But now, if for a small business, if your turnover is not up to 100 million, you don't remit VAT, and your fixed asset is not up to 250 million, you don't remit VAT. You don't remit VAT. You don't charge
VAT. Even those that are doing small, why is everybody now charging VAT? When even those that are doing small business are charging us VAT.
So that is where they are getting it wrong. They are not supposed to charge VAT. Once you charge VAT, you have to remit it. So this aspect of not charging VAT comes to help small business owner so that they can be competitive. So as a small business owner now, if I'm not charging VAT, let's say my invoice, if I'm giving you my invoice to be 100,000 as a small business owner, you know, 7.5% of VAT is that's like 7,500. If I add it to it, instead of the 100,000, it's going to be 107,500. So small business owner should just invoice you 100,000, which will make individual or business people want to transact with you as compared to large business who must charge VAT. So, but a lot of people does not understand. They still go ahead to charge. But once you charge, you have to remit it to the government.
Okay.
So if you're saying you've not met this threshold of 100 million or 50 million and you're charging VAT, you have to remit it, because if you don't remit it, once they come for tax audits and they review your invoice and document and they realize you have been charging VAT, they will ask you to pay for all those tax you've been charging, and there's going to be penalty and interest on it.
I was getting to the penalty. How serious are these penalties if you fail in filing taxes, or if you delay? Is it delay in paying your tax, or you don't pay your taxes at all?
Yes, so is both way. So for something like that, once let's say this is May now, by the
Mhm.
end of May, every revenue that you have made, you're supposed to have added everything together and calculate your 7.5% on it and remit the VAT on or before 21st of June.
Okay.
So if at the end of May, that's May 31st, whatever you have made from 1st of May to 31st of May, calculate them all together, charge yourself 7.5% on it, and ensure you remit to the government on or before 21st of June.
So that 7.5 is what you're giving to the government.
Government, yes, that is what you're
That's
giving to
for
the
fact.
government. That's for VAT.
Okay.
And you must remit it on or before that 21st.
Right.
But some people don't remit it. So even when your threshold has not met that 50 million and you register for VAT, you can file NIL. NIL. That
Okay.
means I've not made up to the amount that I'm supposed to be remitting. But
Mhm.
because I've registered for VAT, you file NIL. But some people don't do it. That is where we now see that interest coming in and penalties coming in. Then for people that has company income tax, for your company income tax, by the time you're done with your accounts, maybe as at 31st of December, you should have, when you're through with your account, you must file your return with the FRS, now NRS, on or before 30th of June the following year. You know,
Okay.
for those that for 2025 now, they must have been doing their audits as at this period.
Okay.
Every company must file their annual return on or before 30th of June 2026 for companies that operated in 2025. So when
Right.
you don't file all those things, those are where penalties comes in. We also have for people that are under IRS, Internal Revenue Service. So people that pay payee to their employees and all those things. So for payee now, you must file, if you have paid your staff their salary, let's say for April salary, you must have paid April salary at the end of April. So for their payee, for you to file their payee, you must file it on or before 10th of May.
Hmm.
So when you don't file it on or before 10th of May, that means you failed to do what is required. By the time they come for audit, all those things are what brings about penalty and non-compliance with tax.
Hmm. Hmm. So is it possible for a business to recover after falling behind on taxes?
Yes, it is possible.
That your yes
So
was not
this,
fast.
yeah, it is possible. So how the way it is possible you do the right thing before they comes to you.
Oh.
So there's what we
Because
call
you might
tax
not be
audit.
able to recover, is what you're saying. Because
Yes,
the penalty
yes,
will be high. Because it's not the normal
yes.
taxes they are going to charge you. You have to pay the normal one, and then you have to still pay the penalty.
Penalty and interest. So, but
Yeah.
yes, penalty and interest. So, but if you do it before they comes to you, before they realize you have actually not been complying,
Right.
then you start doing the normal thing, then it will reduce whatever penalty or whatever interest you're supposed to be paying. But if you wait till when they come for tax audit and they are the one that checks your record and detects
Wow.
that you have not been paying this, you have not been complying with this, then they will charge you what you're supposed to have remitted. They will now add penalty to it, they will add interest to it.
So what about for is it worse for businesses who didn't file at all? And the penalty is different. You did not file because this is in the case of someone who has filed and wasn't paying taxes. For someone who never filed, is it different for them?
They are more, it depends. Well, if you have not been filing at all, there's penalty, like okay, like VAT now. You're supposed to be filing, if you have registered, you're supposed to be filing NIL every month. If you have not met that threshold and you're now not filing, there's a monthly penalty and interest for that. So by the time we start adding everything together at the end of the year, it's going to be running into millions. So, that is not filing at all. There's interest and penalty on it. Now, you're supposed to pay. You now did not pay that amount
Yeah.
again. They will now calculate that amount again. Then there's not going to be penalty and interest on that.
Wow. If you're a business owner out there and you're listening to us this afternoon on Her Business, our guest has been so gracious. I mean, very, very detailed in breaking down taxes. And this is where it is really that, oh, me, first of tax, me, first of tax. Well, you're going to have to pay it because if they catch you. So I wanted to ask, at the beginning you had mentioned that it's important when you register your business, then
Mhm.
you open an account. There are a lot of businesses that haven't registered with CAC, because it is when, so for instance, let me say my business is Fumi Goodies or something. I did not register with CAC, but maybe I'm baking food and I'm baking cake and whatever, and I'm selling. What happens? And when people pay, they pay into my personal account. Is there any penalty there? Am I going to get into trouble for someone out? Because we have a lot of business. A market seller who's selling pepper, for instance, I don't think she's going to go ahead and say, I'm going to go and register my pepper business with CAC. In those kinds of situations, I want on terror, ton teja in the market. And maybe all they think about is their yaloja in the market. They're not thinking about CAC. How does this apply to those section of people?
Okay, there's actually a special case for those alata, eleron, and all those things, those
Okay.
that need carpenter, mechanic, and all those things. So this new tax law has there's this new provision, there's a provision for them that at the end of the year, a specific amount, which is not going to be too high, because they are not, you can't really, like, these people does not, some of them does not even have accounts.
Mm-hmm.
Talk of to now say, okay, you want to track them, that okay,
Mm-hmm.
this is what you're going to pay or something like
Yeah.
that. So it might be difficult to, like, say you want to tax all those people, but there's we just the tax law is trying to ensure that everybody comply. So
Right.
there's a